Hello, everyone. Welcome to our March edition of The Pitch. Excited to be coming to you from our new studio here in Redmond, Washington at StockCharts headquarters. And in celebration of International Women's Day, we're super excited to have three fantastic women technical analysts who are legitimate technical analysts in their own right each. But it's really cool to have the three of them together and have a really good conversation. I want to welcome each of our three panelists. Mish Schneider, who's the Director of Education and Research at MarketGauge, coming to us from New Mexico. Erin Swenlin, VP and Senior Technical Analyst at Decision Point, coming to us from Southern California. And also from Southern California, we have Ellen McGonagle. She's the Senior Managing Director of Equities at Simpler Trading. Mish, Ellen, Erin, thank you guys so much for joining us. Welcome back to The Pitch.
Thank you. Great to be here.
Yeah, very excited, especially to be with all of the wonderful women analysts that I adore.
100%
Yes.
agreed. And it was fun before just talking about how we all got to see each other at ChartCon last year, which was a lot of fun. But the three of you in particular, a really, really cool conversation. I'm excited to bring some of your expertise together. Also, I've had each of you on my show, and Erin, we're going to be on today with talking about the markets. And so I've had a bit of a touch with each of you, just a check-in on where you're at. So I'm excited to kind of have a conversation together and see what sense we can make of things. It wouldn't be The Pitch if it wasn't a pretty climactic, volatile day in the markets. And so that's exactly what we're getting so far. As we're going here, we're seeing the market sort of rotate lower. And so we'll think about what this means and also try to connect it to the longer term trends overall. If those of you that have not been a part of The Pitch before, just so you guys know, we will have each of our three panelists provide one pick each, and then we'll go around the horn, round robin, until we get to 5 stock and ETF ideas from each of them. Then the second half of the show, we'll talk about them as a group, see what insights and ideas we can tease out. Mish Schneider, we're going to start with you. Thank you so much for sending some picks ahead of time. We're going to start with your first idea, which is RumbleON, ticker RMBL. What's the thesis here?
Well, first, I just wanted to come on and say, are we ready to rumble?
Noted.
So I like it here in particular. It's sort of outperforming what we're seeing, what's going on in the market right now. But if you look at the three different scenarios that I have here on the chart, the first thing, of course, you see is the 50-day moving average. That's the blue line on the price, which with today's action, it's coming back above, although it's inside the big down bar yesterday. And then if we go down to the performance versus the SPY on our ACP plugin, it's kind of on par right here. So that would be interesting. And then if we go down even further on the real motion indicator, it's actually already in a divergence because it's been over the blue line, the 50-day moving average, and it's clearing over the 200. So the momentum, certainly we're seeing that today with it being up over 3%, and the price has to do a little catch up. So essentially what I'm thinking here is that if it closes over 850 and then confirms, let's say the next day, that would be a pretty good signal. Well, I think a pretty good tight risk, maybe down to 775 to just give it a little wiggle room.
Not bad, and an interesting sort of consolidation period. Potentially we're sort of moving back to the upper end of that congestion area. Thanks for that first pitch, Mish Schneider. Ellen McGonagle, welcome to The Pitch. How are you doing? You all right?
I'm doing well. Thank you ever so much. Yes.
Good. So thank you for sending some ideas. We're actually going to start with the consumer discretionary sector, Airbnb, ABNB. What's the idea here?
Yeah, you bet. So the company over the last 6 quarters, they have put out 5 very strong quarterly earnings releases. So they are growing. The company during the pandemic, they cut spending. And so they were able to survive that light period. But we can see that gap up on really tremendous volume. The company reported 500% year over year earnings growth. And from there, we did see the stock pull back to its 21-day, very orderly pullback. And of note for my work, when we see a stock, it will ideally pull back after this type of gap up And the momentum indicators, that RSI and MACD, remained in positive territory, precisely what you want to see. The stock has digested that huge gap up. And over the last few days, we are now in the throes of regaining that uptrend. Today, the stock is back up above that green 10-day simple moving average, and it is poised to trade higher. One last note, today the company did announce that they will be reducing staff, and that has been a news item that has gotten investors a little excited, a way to cut expenses. And so I think the stock is poised to continue to form the right side of that base. It's looking very constructive.
When we, I really appreciate that pitch, Marielle. When we get to the Q&A a little later, I want to ask you a little bit about that sort of that weird scenario we're in right now, where bad news is good and good news is bad. It seems like, and I know for a lot of investors, that's a tough thing mentally to sort of get through. But we'll get to that a little later in the show. Erin Swenlin, welcome to the pitch. You've been on a couple times. Are you ready to go with your 5 picks?
I absolutely am. I hate to bring something so obvious to the table.
No, we'll do it.
But you know, everybody's got their, they have their own, eyes on this chart, but it just was too juicy for me to get rid of here. I had to include it. It's had that really good pullback. It formed a higher low from January's low to what we're seeing here in February. We've got price now above those key moving averages, the 5, 20, and 50-day EMAs. It's doing a nice little mechanical pullback after a rally that was pretty strong. The one thing I really liked about it is upside potential, because if it makes a run and it gets up to that February top, that's actually going to be about a 14% gain. So I think there's a lot of potential here. You could probably set a stop at about 6.5%. So really you're looking at a pretty nice risk reward there. I've got my PMO rising. Stochastics are now above 50. We can see that relative strength of the group is improving. You can see that Google's leadership isn't quite there against the group, but it is doing very well against the SPY, as you were just pointing out. So I think Google's looking good moving forward. I'm in the camp that we are going to continue to see a rally here. So I'm looking for those more aggressive stocks to start doing well.
Really, really interesting. You hit on a bunch of different things, which we'll get to in the discussion portion. But I love that the improving relative strength is certainly undeniable, right? Weaker in February, now really starting to turn higher. That's a great example. Thanks so much, Erin. Mish, we're to your pick number 2. We're going going overseas to Tencent Music Entertainment, ticker TME. What's the thesis here?
Well, again, streaming, entertainment, these are all things that we've been looking at. But the stuff that hasn't been the typical areas, like, for example, Netflix. So this is really more, it's a Chinese stock. And I wanted to look at something that was actually outperforming in China in an area that I think has potential growth. And this fits the bill. It also happens to be something that I covered in my outlook for 2023. So I think we're looking here at a weekly chart. Yes, we are. And so you can see it's well above the 50-week, which is the blue. It's talk about a period of consolidation. It's in a tremendous period of consolidation right now. Needs a little bit more work to really get going here, because it's had a little bit of heaviness, obviously, along with the market. But it is outperforming the SPY on a weekly basis. We just don't have enough information there to really gauge the momentum indicator, because it's such a new stock. But nonetheless, I would like to see all of this consolidation be taken out to the upside. And then I think you have a really pretty good risk here to, really basically under these recent lows. I wouldn't go crazy sitting with this forever. But if it firms up and takes up from here, I think it has a lot of upside, at least to that 200-week moving average, if not higher.
You're shaking up timeframes on us and everything, and I really appreciate this walk through the weekly chart, Mish. That's actually really, really interesting. I have my mind is racing with things to address in form of questions, and I promise we will get to them all. But I really appreciate it, Mary Ellen. We're to your second chart, Arista Networks, ANET. This is a technology name. What's the idea here?
Yeah, Arista Networks is a company, a content provider of network software. And among their products is the ability, software security. They can protect against attacks. This is another big grower. They just came out with numbers about 3-4 weeks ago, 72% by way of year-over-year earnings growth, and very similar to Airbnb, where the stock had a very orderly pullback. February was a difficult period for stocks, particularly growth names, and it pulled back to that 21-day simple moving average where it found support, all while the momentum indicators remained in positive territory. The stock is in a growth mode. They are seeing revenues increase as well, not only from new clients, but also upgrading to existing clients. And so as it comes out of the right side of that base, look for a base breakout and a continuation higher, particularly if we can see growth stocks continue and remain in momentum mode.
Really, really interesting. You're highlighting a number of these really interesting charts that have had good runs and now pulled back recently to the ascending 21-day, both of those. Really, really good examples. First off, Erin, we had Alphabet. Thank you so much. Chart number 2, Johnson Controls.
So Johnson Controls, it's in industrials. I've actually been a fan of industrials, looking under the surface or under the hood, as I often say, looking at our participation numbers. They're starting to improve for industrials. This one looked pretty good here because I liked, well, I mean, everything on this chart I like pretty much. So you've got that RSI that is positive. Yes, it's falling down a little bit, but of course, we're having a bit of a pullback today. The PMO just gave me that crossover buy signal. We even have, and you don't see these very often, I'm sure you know, Dave, is a positive OBV divergence. So I'm really happy to see those rising bottoms compared to the declining bottoms. Generally, when we see those kinds of divergences, you're going to see an extended rally come off of those. So I think that that's set up very nicely. We've got stochastics now above 80. We want to see them above 80. When they start oscillating above 80, they are showing you prices very strong. There's internal strength. And of course, my relative strength studies, that first window tells you what the industry group is doing to this with the SPY. It is moving higher, so we know it's outperforming. The next one tells you the stock and how it is compared to the SPY. It is doing well. But more importantly, the very last window I love, it's the stock compared to its industry group as far as relative strength. If you see a rising relative strength line there, you know that you're picking one of the leaders within that sector, or I'm sorry, within that industry group.
I love the trifecta of improving relative strength. Super clear on the chart of JCI. That's a great example, Erin. Thank you so much. Mish, we're to your pick number 3. We are now going to agriculture, and I know you have a background trading ag contracts, and so interested to get your take on something like corn in this environment. What's the thesis here?
Well, there's 2 charts I sent you for a reason. This one that you're looking at right now is the ETF of corn on a monthly chart. And so I have been really big. I think this year, the 23-month moving average has been the savior in terms of my analysis, but also very, very telling in terms of where you should be looking. And the reason why is it's 2 years, right? So you got 2021, really bullish, 2022, really bearish, 2023, we don't really know yet, right? So anything that is above the 23-month tells me that even if it's retracing there, it's retracing still a better business cycle. And we know, obviously, grains have come off a lot from the top. And especially when we take a look at the daily chart here, this has come off a lot and went into a bearish phase. But the divergence between the monthly time frame, which is still very much in a bull monthly trend, versus the daily was compelling. So if we can go to the daily chart, okay. So now you can see the day we had the big low and reversal recently. Yeah, you're right there. Okay. We have a scanner that looks for that kind of bottom. We call that a glass bottom. And basically what that means is you get a new 60-day low, or it could happen on a high. It's a one-day reversal. And then it closes in the top 25% of the trading range. And so what happens is that not only, and especially if it's on good volume, otherwise it would not come up on the scanner. So what that tells us right now is that, kind of like we've seen in so many instruments, there's sort of this exhaustion bottom that happens. And that's what we're looking at here. And as long as that low stays the low, it gives you a very tight risk opportunity. So now what's happened since? Immediately, it started to look like it was going to rally over the last couple of days, and now it's come off. Obviously, strong dollar, hawkish talk by the Fed, et cetera, always affects commodities in general. But I think at this point, it's worth noting that if we can get through 2550, we're seasonally in the potential disruption to a growing season, whether it would be tremendous rain or tremendous drought. We obviously have food demand that could be rising. Looking at sugar, which looks completely different, is telling us food demand is still there. So that's what I'm looking at. 2550 clears. I'd like it. And like I said, you've got a really tight risk to under the low of that day, which I believe was like 24 something. If you click on it, we can see what it was exactly.
Yeah, it's so interesting. And with a number of these charts we've hit, it strikes me there's sort of what I always call a natural stop, right? There's sort of that really clear previous low to sort of key in on. That's a perfect example with the corn ETF, ticker CORN. Mary Ellen, we're going to get to your third pick. We are now going to consumer discretionary in the auto parts group, a group that has actually really come into its own here recently. This is Autoliv, ALV.
Yeah, this is actually a Swedish-based company, and their products that they provide to the auto industry are all about safety related. And they have seen a real niche with EV. So it's kind of a silent play on the growth in the EV market. They've been expanding there quite a bit. And what we can see is the stock had a rally going into their late January earnings. And upon the release of very strong numbers, they had that gap up. And when you see a stock form a base breakout upon a gap up on earnings, that is considered the strongest base formation based on historical studies. From there, oftentimes you will see an advance beyond that, such as what we are seeing with ALV. You want to take a look at the volume on that gap up base breakout, super high, indicating accumulation, and then continued high volume characteristics on those rally days relative to your down days. So we've seen all of that take shape. The company has a price target at 144, I believe. And so analysts are really excited about the prospects for this company. They are continuing to see growth, and it looks great going forward as well. And they were added to the S&P 500 mid cap. That's that big gap up that took place yesterday.
Interesting how that can impact some names. A number of institutions, I would imagine, are looking at that for additional exposure potentially. Erin Swenlin, we're to your third pick, PCAR. This is in the industrial sector. Talk us through this one.
All right, another industrial. I really like the breakout that we saw yesterday. We are seeing a little bit of a mechanical pullback after that breakout. We had, 1, 2, 3, 4, 5 days of rally. So it was really time for it to pull back a little bit. And I like the way it is pulling back. It's still a little bit below that new support level, but I still like it. We have got an RSI that is positive, so we know it's trading in the upper range of its 2-week trading range, so that's excellent. We have the PMO, which is nearing a crossover buy signal, always a good thing. We have another positive OBV divergence. Again, I was really excited to see this on some of these charts that came up in my Diamond PMO scans. I also found that stochastics are above 80. And like I said, I like to see them there. And then, of course, as you mentioned earlier, we do have the trifecta of relative strength going on here. Not only is the group doing well, but the stock is one of the leaders within its group right now, and it is performing very well against the S&P.
Beautiful. Improving relative strength all around. I like what I'm seeing as well. Mish, we're to your fourth pick, Teva Pharmaceuticals, TEVA. What's the thesis here?
Well, actually, it's having some struggles today, but up until today, This is, again, a weekly time frame. So I always like to look out so that I can see where relative support is coming in from a longer place than just on a daily. And up until today, this was actually holding above the 200-week moving average. It's now breaking it, but it's still holding the 50-week. So essentially, here was the theory, is Teva was it's an Israeli pharmaceutical company, and it was one of the companies that got into big trouble with the opioid crisis. And they finally this year settled the suit, which means that all the litigation they were going through for years is over. They cannot be resued on that. And so I thought that was a boon for it. And you can see when that was settled, if you go back in time a little bit, how it was rallied like crazy in July. And since then came off and looked like it was just in this holding pattern. Now, today it's having a little bit of struggle. Could be a fresh round of opioid crisis news that hasn't really nothing to do with them, just getting caught up in it. Could be the fact that Israel right now is having a lot of its own geopolitical problems, and this is getting some of the impact of that. But nonetheless, this is a stock that has already proven it can have some legs. It's still slightly outperforming the SPY on the weekly basis. We did have a mean reversion right near the highs on the momentum indicator, but we're right at the zero line, well above the 50. So I'd give it a little breathing room here. But if we can kind of hold around these levels, say 9 to 950, establish a new base, or this is a one-day drop, just a week, shake out week longs, and tomorrow we can get back up over, say, 950, then you would have another really low-risk opportunity to get in.
Ooh, beautiful. And you're hitting all the time frames here in 5 charts, which is pretty awesome, Mish. Thanks for that on Teva Pharmaceuticals. Mary Ellen, what's your 4th charts? A name that may not be familiar to many, Meta Platforms. Talk us through the idea here.
Yes, no one has heard of this company. Let's take a look at the stock. We can, again, you're going to see a lot of commonality in what I find attractive and what does tend to work when you have that gap up. So here, the company did not come out with great numbers by any means, but the management was very constructive as far as touting the year of 23 as the year of efficiency. They've continued to cut back on staff. But more importantly is that Meta Platforms did reach a milestone of 2 million users. They are continuing to see expansion in usage of their platform. And then also their AI component has really captured the attention of a lot of investors. So very similar with that gap up into a base breakout, pullback to the 21-day, finding support, all while the momentum indicators remain positive as the stock is forming the right side of a base. I'm on the lookout for a nice MACD crossover that would be quite constructive for the company and for the stock's chart, as it would continue to advance higher from here. So great looking chart.
Really interesting chart technically. And I love you mentioned, not just Facebook. And arguably one of the best things they did was change their name to Meta, only to get away from the Facebook label. Because when I think of Meta now, I think a lot about WhatsApp. Because when you travel outside the US, everyone uses WhatsApp for pretty much everything. We're actually the outlier in the US not using WhatsApp as for pretty much all things. So interesting play on AI as well, Marielle. That's a great example. All right, we are to the solar ETF, ticker TAN. Erin, what's the idea here?
Yes, I actually had a stock that came up in this area as well. So I'm looking for renewable energy to break out of that trading range that it has been in. It's another one where you can see a higher low that we ended up with. We've got a breakout that just about happened yesterday. And again, it is pulling back slightly, but boy, those indicators have not been affected at all. The RSI stays positive. PMO is giving us that crossover. I didn't really catch a positive divergence here on the OBV, but we do see a confirmation as those OBB bottoms are rising along with price. Stochastics are above 80. I love the relative strength here of this ETF. I do ETF day for Decision Point Diamonds on Wednesday so that I can give everybody, all of my subscribers, something. And this ETF has definitely been on my radar, and I think it is getting ready to do well. Again, I'm pretty bullish on the market, which is an unusual position for Decision Point to be in, but we are. And so I think these growth kind of sectors, I think we're going to see some action here in the short term for certain.
Yeah, First Solar, by the way, is currently the top ranked stock in the large cap scooter rankings for StockCharts for good reason. I mean, it's had an incredible run and a nice move to the upside here recently. All right, let's get through our last picks, and then I'm dying to have a conversation with the group together. Mish, your fifth pick is actually going outside the U.S., the Vietnam ETF, ticker VNM. What's the idea here?
Well, I always like to look for something a little bit different. And since we're so U.S.-centric, other than obviously the Tencent, and also even the Rumble, I am looking out beyond the United States. But I would be hesitant about a lot of the Asian countries. But this really caught my eye, Vietnam. First of all, in terms of manufacturing, they have really grown, and their economy overall has done very, very well. One of the reasons they've been under a lot of pressure is because their real estate market actually got a little too rich. And of course, any signs of global recession will clearly impact Vietnam as well. But then in terms of our relationship with China, considering we are still addicted to cheap goods, even with all of the rhetoric about trying to break our ties, Vietnam is somewhere now where a lot of the clothing made in that we see in the USA, not made in the USA, is actually made in Vietnam. So I keep looking for all these little signs, and I bought a dress, for example, and all of a sudden I saw it was made in Vietnam. So this was all the type of things that I thought maybe this stock or this country fund has been very undervalued. And so looking at the chart, that clearly looks like it could be the case. Now, before I told you about a glass bottom that comes up on our scanner when it's a one-day reversal, this is actually a two-day reversal called a brick wall. But it's the same idea. You get the new low, new 60-plus day low. But instead of it the next day having a different range, it has an inside day, which is what we had the next day, from the day before of that actual bottom, and then the gap up the next day, which is what this had. So I think the selling is done here. If you look at the leadership indicator, the plug-in, it's not quite yet outperforming the SPY, but it looks like it can certainly take leadership. And here again, if we take a look at the momentum indicator, it's very close to the 50, hasn't taken it out, but look how far the price is compared to the momentum. So momentum is starting to shift along with the price reversal. Fundamental, I can certainly support Vietnam possibly doing a lot better. And again, since I like to see areas clear, getting over 1170 at this point. And then you have two choices. You can risk to under that low, which I believe was like 1113, or take it down a little bit if you like round numbers, particularly if you're only risking about $1 or 70 cents under 11. And, I don't know where this can go to the upside. Obviously, it has headwinds like everything else, but I love the risk reward.
There was a fantastic little anecdotal Peter Lynch feel to your pitch there, which is awesome because the idea for this show, the pitch came from the 2-minute drill that Peter Lynch created at Fidelity years and years ago. So thanks for that gentle nod back to the origins of the show, Mish. Whether or not you intended it, that was brilliant. Let's get to your last pick, Mary Ellen. We're going to NVIDIA. Semiconductors certainly have been a red hot sector in 2023. Why do you feel it's this good idea going forward?
Yeah, you bet. NVIDIA has been on my MEM Edge report suggested holdings list since January when the semiconductor group turned positive. We stayed through that pullback. And of note is that gap up again, earnings related. The numbers were not great, but it was management's excitement over increased demand for their AI products. And also at that time, when they released their quarterly report, they cited an increase in gaming demand for their chips. And that is new. That had been deteriorating. So you have a couple of drivers there. And as it relates to the semiconductor group, you will want to keep an eye on that. It turned positive very briefly late last week, pulling back a little this week. But NVIDIA is very clearly the leader in that space. It's been a great performer for us. It's in a nice uptrend. The RSI, MACD, both in positive territory as it trends higher.
That was a great thought there. And interesting, if I remember right, part of the O'Neill methodology, a catalyst for growth, right? Some sort of opportunity for it to go further, and hitting on the gaming appetite, AI, a lot of potential upside for NVIDIA with those themes. That's a great pitch and a great chart. We'll get to your last chart, Erin. This is Viasat, VSAT in the tech sector. What's the idea here?
All right. This was another one where the upside potential really caught my eye. Doesn't have to go too far. It's already breaking out. It did pull back just a little so far today, but we have that beautiful double bottom that I meant to annotate and did not. And with yesterday's move, it did pop out above that confirmation line drawn across the middle of that W on the double bottom. So I think that looks really good. Of course, we've got the positive RSI to back it up. The PMO is rising almost vertically now after that really nice gap up. And you can see that the volume is also following price, or price is following volume, I should say. Really nice big pop on yesterday's rally. You can see also stochastics are just about above 80. They certainly are in positive territory, so they're doing what we want. The only thing I would say that's a little bit, I wouldn't say a problem, but not as exciting, is that relative strength of the group to the S&P. It's performing pretty much in line with the S&P, which generally has been a bad thing because we've been in a bear market, but it's acceptable right now because, like I said, I'm short-term bullish. You can see that it's doing well against the S&P. It's doing well against its group. I really like the setup here. And again, it's in that growthy area of technology. So I think we're going to get that move, and it could be an over 15% move if it reaches that prior overhead resistance, which those indicators certainly suggest it will.
Great pitches, 15 fantastic pitches, you guys. I want to thank you so much. Let's recap each of you and what names and ideas you shared with us. We'll start with Mish Schneider of Market Gauge. We have 5 ideas from her. RumbleON, RMBL. We went with Tencent Music Entertainment, TME, which is a Chinese name, going to agriculture with the corn ETF, CORN. Teva Pharmaceuticals, TEVA, and then again outside the US with the Vietnam ETF, VNM. With Mary Ellen, we have 5 fantastic picks as well. We started with Airbnb, looking in the discretionary sector, Arista Networks, ANET, which is a tech name, Autoliv, ALV, which is an auto parts stock in the consumer discretionary sector, Meta Platforms from the FANG Group in communication services, following with NVIDIA, a semiconductor name, of course, in the technology sector. Finally, we have Erin Swenlin of Decision Point, starting with Alphabet, GOOG. We have Johnson Controls, JCI in the industrial sector, PACCAR, PCAR. Going to, in technology, renewable energy equipment with the ticker TAN, which is the solar ETF, and then Viasat, VSAT, which is a telecom equipment name in technology. Really interesting, you guys, and it was just so fun hearing all the different pitches and how you sort of triangulate all of these things. I have to start with the big picture just to go through it. And in an environment where it's, I guess I would describe the macro environment as uncertain at best, just in terms of the macro headwinds and tailwinds we hear. We had comments from Fed Powell this week, Fed Chairman Powell, which is weighing heavily on the market. How easy or how difficult is it to find good ideas for a show like this in an environment that is so challenging? How would any of you answer that question?
Well, I use my scans. That's pretty much what I'm almost a technical analysis purist. And for me, my scans have really served me well. And using those primary indicators that I like and the setups with my moving averages, I like it. I do pay attention to what's going on in, the overall discussions fundamentally, and a lot of noise, I must say. But really, I always just fall right back on the chart and my scans. I trust them. I trust my PMO, and they have served me well.
It's so interesting, and the quote that I've shared with a lot of people: it's always a good time to own good charts. And Mary Ellen, with your work with O'Neill, I always try to bring up the O'Neill methodology because you so brilliantly just sort of illustrate these ideas. And it strikes me when you pick up the IBD on any given day for the last number of decades, there are charts that just are kind of working. So how does that make sense to be finding good opportunities in an environment that's arguably pretty challenging here?
Yeah, what you may have noticed is most of the names that I highlighted are names that recently reported strong earnings or had some announcement that got investors excited about it. You will need to see that catalyst. Now, of course, at this time, there are headwinds. We are still seeing elevated interest rates, which are not good for growth stocks. The S&P did not expand or increase above that 4,100 level. So it's a little shaky. If you use the names that I presented, put them on your watch list. They are definitely names that have a future, they have growth, and they are being readily embraced by investors.
Yeah, it's a really good point, Mary Ellen. How can you tell they're being embraced by investors? The prices are going up, right? It's sort of technical analysis 101, I guess, right? You're showing these strong charts. Yeah, go ahead.
And pay attention to that volume. If you're seeing more volume on those up days, it can be as simple as that, really. Also, the momentum indicators, when your stock remains, the momentum remains positive during a pullback period. That's really quite constructive. It's what you want to see. If you do see that RSI begin to dip below that 50, that's going to be a red signal or a red flag for me, particularly if it begins to break support by way of those moving averages. But as long as we are heading in the right direction and the momentum is positive, I'm going to stay with those names.
You know, Mish, I'd love for you to comment just on how you reconcile sort of the goal of stock picking with the macro headwinds. It strikes me that a number of your names were names that have had a bit of a run, but now are consolidating a little bit. I guess the way I would ask it is, what's your confidence level that we sort of resume this uptrend that we've clearly paused on some of those charts?
Well, the specific picks or the market in general? I mean, I'm asking you to clarify the question. Do you want me to make that comment based on what I picked or just the market in general?
I think in general, right? Because you know, with the individual name, you're showing some names that are pulling back, but you know, again, it's sort of this big question mark right now with where the macro environment is headed. So I guess, how dependent are some of the things that you've been sharing with us? How dependent is that on sort of the macro scenario?
Okay, I get it now. Well, yeah, I mean, because we're in this very persistent trading range in terms of looking at the indices, what I'm trying to do is look a little bit outside of the focus of just what's in the S&P 500. And of course, I also use the economic modern family to help guide me. So retail is teetering on support. Transportation and semiconductors are clearly outperforming, while regional banks are starting to collapse. So essentially, I think that there'll be a clue there coming. If retail continues to hold, that'll tell me specifically not only these picks, but some of the other ones, especially the ones that Mary Ellen and Erin talked about, could continue to move up. And then the third thing is that I like to look at mega trends that could actually surpass whatever the commonality is in the market. So if we, so if there's a lot of liquidation going on and we have some kind of a liquidity crisis, as we know, that's one thing. But short of that happening, and if we stick in that trading range, I'm really looking for things, not necessarily big momentum stocks, because I'm a little nervous here. But if we do hold in some of these levels, particularly like I'm looking at retail, then I would say those momentum stocks would go higher, and these that have really kind of bottomed out and consolidated or made a big move and now are digesting and consolidating at lower levels could be good opportunities. But this is a stock picker's market right now. And that's where Mary Ellen and Erin and I hopefully do the best, because we have this sort of approach more technical. I may be more of the macro person of the three, only because I've been called to do that so much with the economic modern family and looking beyond the country. But yeah, I mean, that's kind of where I'm at right now. I'm trying not to be all over the place. There's thousands of symbols, and I'm trying to keep my focus into what I think the big themes are. I still think inflation. I still think food. I still think that some of the emerging markets could continue to do better if they don't have big inflation problems. And of course, I think streaming is something that's just really growing, only not necessarily in the classic places, like Erin even pointed out one that I hadn't heard about before.
It's interesting. You mentioned the chart of retail, and we're looking at the XRT. I arguably we're at that maybe for lack of a better term, Erin, we're at a decision point, right? Which is sort of, we've had this rally, higher highs and higher lows, and this is either that brilliant higher low, or it's sort of like this breakdown moment. I feel like we're sort of right at that point. But if we hold, I mean, this all of a sudden just looks like this incredibly orderly uptrend. I'd love, Erin, if you could talk about on some of the charts that you shared, you showed a series of moving averages, and a number of them, it was using them as a bit of a timing tool. Can you talk about how your use of moving averages and also relative strength is part of the decision-making process? Why are those in a certain configuration so important to the stock picking process?
Well, for me, if a 50-day EMA is above a 200-day EMA, you've got a bull market configuration on a chart. You know that your risk maybe is slightly less because you've got that configuration of a 50 over the 200. Watching the 20 and 50s, I like to see where I'm getting what we call a silver cross, where the 20-day EMA crosses above that 50-day EMA. That is your intermediate term. Okay, things are looking even better. You generally are going to see some follow through on any rallies that brought that EMA back up there. But we also do have to keep in mind that moving averages do lag. I mean, that's why I use them more for context than for actual trading. So that would be kind of the main thing there. As far as the market goes, I just have to talk about this. I know you guys all touched on it a little bit. And that is, yes, I think this market is going to be set up to do well. And one of the reasons is because my Swenlin trading oscillators have actually been showing positive divergences for days. I got a negative divergence yesterday, so I knew we were going to probably move lower today. But I'm looking for a pickup there. I mean, when you see those oscillators moving higher on 2 down days, like pretty significant down days, that really told me the short term's looking good. But sorry, I had to throw that in there with the moving averages.
No, that's super, super helpful. Mary Ellen, it strikes me when we're going through some of your charts, and I forget which one in particular, but we talked about this sort of disconnect between good news being bad for the chart and bad news being good for the chart or the stock. How do you reconcile that, and how would you describe the process of hearing bad news, which I think human nature is just naturally to think that's obviously bad, but certainly with a lot of the tech names shrinking the workforce and the stock rallies, can you explain that for people that are just getting started? Why would that make sense?
Oh, absolutely. It's all about cutting expenses. And unfortunately, the reduction of staff is one very clear-cut way that you can do that. And it will, over time, improve that bottom line. We can go back, take a look at energy stocks, for instance, coming out of that 2020 bear. And many of those names were very, very depressed. But throughout that period, for that prior 2-year period, they had been doing a lot in the way of capital expenditure reductions, both staff, both products, and so on. And so they were able to come out of that 2020 period and roar to new highs since then. So you want to see that type of contraction by way of spending so that they can then improve their margins and bottom line.
Yeah, really, really good point. And again, I think the lesson that I heard from you is to think about the impacts, right, of what that news actually means. What does that actually mean for the investability of the stock? Mish, Mary Ellen just mentioned energy, and it strikes me as I'm thinking through the sectors that were not represented by any of your picks, all three of you. Energy, financials are two sectors that none of us sort of mentioned. Energy, certainly, I mean, at one point was sort of the call, right? It was sort of like owning energy in the first half of last year. That was it. And you sort of handily outperformed. When you're looking at the energy sector, when you're looking at names like Valero or even the big integrated names, what are you not seeing that you would want to see? Or is it more of a macro call, just thinking about the commodity space and energy and oil prices that have been weaker?
Well, one thing that's really so true about commodities is that, talk about technicals, they cycle through and natural gas, of course, would be the quintessential example.
Sure.
And the fundamentals don't necessarily always catch up to the technicals. You find out that storage facilities are at capacity in natural gas. We didn't know there would be a warmer winter, let's say, in Europe, but the chart peaked. And now, of course, we saw this huge crash. And now we could start seeing something similar in the energy space. I wouldn't necessarily call it dead at this point, but I'm not really worried so much about energy. I'm more interested particularly in what happens with crude oil. Because crude oil, I've been calling the whole year the X factor in terms of what happens with the next phase of inflation. And so right now, crude oil has actually found somewhat of support right around that $67 to $70 a barrel, got up to, I think yesterday, about $84 a barrel. It's come off a little bit, but it's outperforming the market again today. So energy, XLE and Valero and Occidental and all those other stocks probably wouldn't interest me. But if crude oil as a commodity future, if that actually starts to move up here and we start to get through $85 a barrel, we get to $95 a barrel. I mean, that's going to send all kinds of messages, not only a great opportunity to buy oil, but also it's really going to say that regardless of everything that's going on, we really are entering a stagflation period. And as another female guest you have on a lot says, things over paper. I mean, we still are there until proven otherwise.
Yeah, really, really good point. Erin, I'm curious if you could weigh in, particularly on the financial sector. If rates are going up, which they certainly seem to be headed to doing that, in general, financials tend to do a little bit better when that's the environment. Anything that is interesting in financials, or any particular reason why the financial sector is not a great place to be based on your work, or they just not scan well at the moment?
Well, they're not scanning well, that's for sure. I don't see any financials coming up, so that was easy not to pick any for this. I am seeing some energy stocks coming through, but as Mish said, I mean, I'm really watching crude oil. It's been in a trading range. It's not very exciting, and I kind of expect energy to do the same thing. Financials, really the problem with financials is under the hood, as I often talk about. We have really low percentage numbers of stocks above their 20, 50, and 200-day EMAs. I mean, we're talking about percentages of 35%, 46%, not the kind of numbers that you need to push a sector higher. It's also been in kind of a trading range. I certainly don't like the look of this really kind of head and shoulders type pattern in the short term that's trying to form with that left shoulder as far as the January top. And now we're seeing kind of that second top here in March. Don't like that look. My PMO is accelerating downward. I mean, there's just really nothing there right now. And you know, rates are just, yes, it can help them, I suppose. But, you know, overall investors don't like it. So I don't see, you know what I mean? So I don't see them jumping in just for that reason. But yeah, I just don't see the support underneath the surface really for financials to catch hold just yet. Looking a little bit, well, kind of a lot toppy.
Yeah, and a number of them certainly breaking down this week. It feels like, and I'm super proud of you guys and thankful that you picked 5 each. This is a tough environment to try to bring ideas around, but you all have highlighted areas where there's strength and where there's opportunity, which is fantastic. That was it. We hit the end of our time together. This is such a pleasure, though, and really I appreciate each of you bringing 5 ideas with you and having so much wealth of expertise and information for all of our viewers as well. So thank you guys each. Mish, thank you so much for joining us from New Mexico. Mary Ellen from Southern California at Simpler Trading. Erin Swenlin from Decision Point in California as well. Thank you guys all very much. Thanks for all you're doing and for continuing to educate and inspire our StockCharts viewers. Thank you guys.
Thank you, David.
Thank you for having us.
Folks, that's a wrap for the pitch. I want to thank you so much for joining us for our exercise. All of our previous episodes, by the way, can be found at stockcharts.com/thepitch. You can see each of the ideas that our three panelists today provided, and also look at some of their previous discussions as well. This is a mini masterclass in investing, I find, as always, but this one in particular, really good way to navigate the markets in uncertain times. For StockCharts.com in Redmond, Washington, I'm Dave Keller. Be well, stay safe. We'll see you again soon.
Hey, Grayson Rose here with Stock Charts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.